You saw that we have 413 Tommies at US Bank. I want to tell you we also have 2 individuals who graduated from St. John's. So it's but following the universal role, they work for someone from St. Thomas. Sooner or later, all Johnnies work for a Tommy. That's just the way it works. So I want to tell you, I graduated in '82, and for those of you who graduated at about that time, that was 3 athletic facilities ago. And it makes me a little sad that the university has determined that those were functionally obsolete, but I still have the same body. So not a lot I can do about that, but my favorite, for those who remember the Armory, was so much beer was spilt on that floor that every third bounce would stick. So we've come a long way. So I'm going to talk about banking and disruption and technology and innovation. You're reading a lot about it in the paper, but I'm going to start by going back. Who recognizes this? Bonanza. Great show. It was my dad's favorite show. Bonanza came on the air in 1959, and it talked about a time 100 years before that, 1859, Virginia City, Nevada. And it was a very simple time. You got to where you wanted to go on a horse or a carriage, you talked to people face to face, and banking was very simple. If you had cattle to sell, you sold your cattle and you had 10 gold pieces, you brought it to the bank in the middle of town. And you talked to the banker and you gave him those 10 gold pieces and he kept it safe for you. And maybe you came back a year later and you would get an 11th gold piece if you wanted to. And in the meantime, the person who was starting their crops and had to buy seeds went to that bank to borrow 5 of those gold pieces with the promise that when his crops came in, he would give them a 6th piece. And that was banking at its core. That was simple, fundamental banking at its core. And I will tell you, it happened in 1859, the show was 1959, and that was banking pretty much until just a few years ago. That's the way banking worked. Now, who remembers this show? The Jetsons, right? George, what was the dog's name? Astro. What was the dog in Bonanza's name? Walter. He was only in 2 shows. But this was a very different time. Now, it's interesting. Bonanza was 1959. Jetsons was 1962, and the Jetsons was for a period 100 years forward, 2062. And it was a very different time. A lot of technology and innovation occurred, and a lot of disruption. No more horse and carriage. It was all about now a car that you can actually float up above and then fold into your suitcase. You remember that? It was actually pretty accurate if you think about some of the things going on today. And one of the things was video conference calls. You remember George talking to his employer on the wall? Video conference calls. And banking was done on devices that we didn't even think about. It is really amazing that in 1962, someone had the foresight to think about all the things that were going on. And my punchline today is that in the last 5 years, we've moved from Bonanza to the Jetsons almost 100%. And it's very interesting. So I'm going to talk about disruption. Disruption is defined as displacing an existing market, industry, or technology, and produces something new and more efficient and worthwhile. It's both destructive and creative, and that's what's happening in banking. And why is it happening? This is a great example. So here's a family of 3, husband, wife, and a child, all in the same room, but they're all in their own world. The husband's on a PC, the wife's on the phone, and the kid's on his iPad. All in the same room, all in their own world. And that's where we've evolved for, and most of this has occurred just in the last 5 or 10 years. Why has it occurred? And you all know this, but there are a lot of industries that are impacting not only how you do your day-to-day life and certainly banking, but the way you do everything else. Amazon. 10 years ago, we didn't have Amazon. Today, you're spoiled. You order something online, you expect it at your doorstep the next day for no charge, and it's right there, right immediately. Uber. Again, Uber, no more hailing a taxi or going where the taxi stand is. It's right there, it's immediate, it's at your doorstep. And finally, something like Netflix. Whatever you want to watch, whenever you want to watch it, on demand, right there at that time. These things have changed the way people think about banking because of that expectation. So if you think about the way banking occurred and the banking was realized just a few years ago, it was like this. You did your banking at a bank, at a branch, face-to-face with a teller or a salesperson. You talked to people about what you wanted to do. You did your transaction this way. And this is the way it was done in 1859 in Virginia City, Nevada. It was pretty much the same way. But it's changed dramatically. And it's changed very much like what I talked about with the Jetsons and those people in a different room. People now expect to have what they want, when they want it, immediately across all channels within a bank. So what banks are doing are changing the way they do business fairly dramatically, because we need to make sure that we're keeping up with the innovation, because otherwise we're going to be out of business. So what are those expectations? Here's how a customer thinks about a bank today. Number one, expectations. Those things I showed you with regard to Uber and Netflix and Amazon, this is what they expect. Experience will be heavily influenced by those other industries. They expect from a data perspective that we, the bank, will know what you have, know what you need, and will be able to offer what you need and what you have together at any point in time across any channel. Interaction's a key here. People still want to talk to a banker, but they want to be able to do things on their device in addition to talking to a banker, and I'll come back to that in a moment. So this whole concept of multi-channels evolved to a concept of omni-channel. And what I mean by that is you start a transaction on any device, your iPad, your iPhone, on the phone, or in person, and you can finish it and resolve it on any other device. So it's changed dramatically. This is a great slide. So it's hard to read, but let me just tell you what it says. On the top of the slide, 60% of transactions today occur on a digital device in a bank. Now think about that. 10 years ago, we did not have smartphones. And today, that is the number one channel that people do their banking on. And only about 15% of transactions occur in a branch today. Now think about that. 15 years ago, almost every transaction happened in a bank. So things have changed dramatically. 60% digital, 15% in a branch. But those are transactions. 80% of sales activity still happens in a branch. Because the fact is, if you want to talk about your retirement planning, college education, buying your first home, or funding your child's education, you want to talk to someone face to face. So most sales activity, most buying of products happens in a branch, but transactions happen on other digital devices. It's a huge change, and this line, you can see for about a year and a half, actually online was at the top, but in 2014, mobile, which is that top blue line, passed it, and that's growing rapidly. So it's incumbent upon us as a bank, as the industry, to make sure we're giving you the best offering on your mobile device, as well as all the other devices that you use. Now, this is another fascinating chart. You've heard that millennials and Gen X don't go to a branch. The fact is, last month, 52% of millennials used a branch, 52%. And you can see by this chart, this is a busy chart, but you think about all the channels that banks have, online, mobile device, branch, ATM. The fact is, all customers, all generations use all channels. It's one of the unique things about banking. We add channels, but we rarely displace or get rid of channels. We just keep adding. And you can see from this chart that it's changed dramatically. So this is a chart that we use on a lot of investor days. We go talk to Wall Street, we talk about our channels, and we have three unique aspects. We have a lot of on-site in-store branches, 800, number one in the nation. So we're in grocery stores, on-site campuses, college campuses. And that we talked about that as being one of our key channels. And then we talk about our metro branches, places like the Twin Cities where we have branches, or places like North Dakota or South Dakota where we have our community branches. That used to be about how we talked about our distribution channels, and we serve about 9 million customers. Today, we add this piece on the bottom because our virtual channel, our digital channel, is actually our number one channel, 6.5 million customers, across all those digital devices that we have and across all the ways we interact with customers. It's far superseded any other category in terms of our physical presence. So what does that mean? So the branch of the past, Bonanza, 1962, and I would say even about 10 years ago, was typically an 8,000 square foot facility. On average, it had 8 teller stations, lines behind those tellers, and people came in to do their transactions. That's the way banking worked until just about 10 years ago. Today, the average branch that we open up went from 8,000 square feet to about 2,500 square feet. It has 1 or sometimes 0 teller stations. It sometimes has just an automated teller machine. And it has more sales presence because we are adapting to the facts I've given you, which is that 80% of transactions happening, 60% is happening digitally. Sales occurs in a branch, so we're changing the face of the branch. Huge change for us and for the industry overall. and impacting the way you interact with banks. So what are banks doing? We, and probably every other large bank in the country, have initiatives underway to focus on these digital channels, but not focus exclusively on the digital component, but thinking about it from an omni-channel perspective. We have two groups, one's called Next Gen, one's called EPIC, Emerging Payments Innovation Council, which talks about all these activities, all these devices, all these ways of interacting, and how we can make it better for the customer and a more consistent customer experience. It's a huge effort underway at the company. And what's happening is change. Now, I remember in 1993, I was in a meeting with some very smart guys from McKinsey who said, Andy, one day you won't need a wallet, you'll pay for your things on your phone. Now, this was when phones were, big. Remember those old? I said, yeah. Well, they were right. They were about 20 years early, but they were right, and that's what's happening right now. So this is Apple Pay. So you can pay with your transactions on your phone or your watch or any device. And this is where fintech gets into the equation. So you've read a lot about fintech, financial technology firms. Things as small as Lending Club, as big as Lending Club, to small ideas that are coming up with concepts. And a lot of people are thinking about that as a threat to banking. You hear every once in a while somebody on CNBC saying banks won't be there in 20 years, fintech will take them over. I happen to not believe that for a very simple reason. Banks have the entire relationship. We have the trust, we've worked with you forever, we know your needs, your wants, and your goals. And that's our role in your life. Fintech's role is to take components of that value chain that they can do more easily than a regulated bank can do, but it's only a component of that value chain. And I think that the winning proposition is actually banks partnering with financial technology firms and working together to optimize the opportunities for the client. And that's how we think about it. We actually have about 200 firms that we're working with through accelerators in the Silicon Valley of different ideas. Now, what happens is you get 1,000 ideas, and 990 are sort of, haywire. They're never going to happen. But you get 10 ideas that are great ideas. And some of the things I'm going to talk about came out of those financial accelerators. So if you think about the value chain and what banks do, what do we want to do? It's pretty simple. You want us as a bank to help you achieve your goals, to manage your finances, to make sure we provide good service, that it's simple and efficient, charge a reasonable fee, and give you access wherever you want. That's what you want from us across all those devices. So I recognize you, I know you, I understand you, I know what you want. That's what a bank wants you, that's what you want a bank to do for you from a financial services perspective. And that's what we're very focused on. And through that, and through these accelerators, we have a lot of technology. I'm just going to hit a few things that are going on right now. But we have a thing called Wealth Management Future Advisor. So the old days where you had papers and papers of your financial plan and how you're doing against your budget and against your plan of your retirement goals, now it's all on your phone and your device. And not only do you have that all on your device, but you can do what ifs. What if I retire at 59 versus 58 or 62? What will it look like? What will my ability to repay and continue to spend money be? All on your phone. Clear exchange. This is another big deal. This is real-time payments. Probably the most significant change that's happened in the last 2 years is payments. We've had a history for years and years of paying with cash first, then checks, then credit cards. And that's evolving to real-time exchange. And that's clear exchange. So for those of you who use Venmo, Venmo is a verb in college. You Venmo it, right? We have clear exchange. And I think over time, this will actually migrate to take over a facility or a capability like Venmo, because it's going to be done by all the banks, and back to that trust factor and the ability to get it done. It's going to be an app called Zelle, Z-E-L-L-E. The top 10 banks in the country are coming together on that, and you're going to have an app, I'm going to guess, in 1 year on your phones called Zelle, and it'll be the way you transfer money if you want to pay the babysitter. If you are all at dinner and one guy pays and the other 3 need to chip in, you'll do it with Zelle. That's what's going to happen. And then the other thing that's happening with real-time payments is real-time payment activity with regard to companies or corporations. When I started in banking in 1985, I was told that branches will start to diminish and checks will start to go down and people will not use cash anymore and it'll be electronic. And for 27 years, that didn't happen. But for the last 4 years, it is happening. And the level of checks is going down, the level of activity around old-fashioned payments is going down, and real-time payments coming to being. But companies are the last to do this. So we have somewhat arcane methodologies for companies paying each other, ACH, automatic clearinghouse, and wires, that have been around for a half a century that I predict in the next 2 years will be gone. There'll be completely new rails. The Clearinghouse, the Federal Reserve, and the top 10 banks in the country are working on new rails that you'll hear about in the next 2 years, again, that will replace mechanisms like this. And it's going to be a huge savings and opportunity because it's going to improve record keeping, it's going to improve speed, it's going to improve the ability for companies to work with each other in a more digital fashion. However, it's not all rainbows and butterflies, because the negative aspect of everything I just said is cyber security and cyber threats. My favorite stat on this slide is upper right. 5 malware events happened in the last second. 5 malware events. I was just at a conference in New York with an expert on this subject talking about this, and he says there's only 2 kinds of companies, not just banks. There's only 2 types of companies. Those who've had a cyber security threat and are trying to deal with it, and those who had one and didn't even know it. This is our biggest issue in banking. This is the new bank robbery. And if we had the old iron bars on that branch back in Virginia City, what we have right now is a lot of technology to protect your money. And I think this is the #1 threat, not only for banking, but for industry overall. And what banks are doing to deal with and handle that threat is a lot of technology infrastructure to protect the data. But the other component of this, if you just step back for a second, all of the mechanisms that we have to handle fraud in financial services were not based on real time. When you write your check and you deposit it and you give it to someone and they cash it, there's a period of time before they can use those funds typically. With companies, there was wires where ACH would happen overnight over a period of time, and all of our fraud mechanisms were built for that period of time. Now, if I immediately transfer my money to you, real time, you have to change the way you deal with fraud. It has to be real time too. It has to be machine speed, it can't be human speed. And this is a huge change in the industry. And I'm fairly convinced that cybersecurity has superimposed itself as the #1 threat in banking. When I grew up in banking, everybody who's in banking in this crowd, whoever took credit training, would say the #1 risk in banking has been and always will be credit. Credit's the #1 risk. I think this is now our #1 risk in banking, cybersecurity threats. Because I can assure you that if you want to think about a bad event, if we woke up one morning and one of the top 50 companies in the United States had all their money gone because of a cyber threat through the bank would be in trouble, but the company would be in more dire straits. And this is the new big threat. The good news on this is that the banks, the regulators, and actually the government are very focused on this. And the way we solve this is together as opposed to separately. What's different about cyber threats is when we were a bank, we wanted to protect our 4 walls, and we put bars and guards, and that's the way it worked. In this structure, you have to work together. So what we're doing right now is if Bank of America has an IP address that's threatening them yesterday, I will know about it today, and I can put up a field to eliminate that IP address from getting in our bank. We're working together, and we're working with the regulators as well as the government. So, sorry to put that downer on there. So I just wanted to make sure it's not all good. It's a lot good, but a little bad, and we're dealing with both sides of it. So what's happening? What are some of the things occurring in the marketplace right now that we either will see, have seen, or are able to get today? The first is beacons. And who has been to US Bank Stadium? It's after US Bank, if you didn't know. It's a wonderful stadium. So they have this, where you're able to, if you're in your seat, there's a beacon that comes back and knows where you are and knows where the shortest restroom line is, where the shortest line for concession stands are, and you're able to really maneuver because of your location. An example of what's happening, you can do the same thing with banking. Okay, who's been to London? I've been to London, right? And who's tried to use their card, and you forgot to call the bank and tell them, I'm traveling to London, and they denied your transaction. Does that happen to anybody? Okay. This is the solution around that. This is something we just introduced last month, and it's geolocation. As you know, your phone has a location device on it. And typically, you are where your phone is. So you don't have to call the bank anymore. The bank knows that your phone's in London, therefore you're in London, therefore your transaction is just fine. And if you're back in the US and you don't want the bank to know where you are, you turn off your geolocation. You turn off the location services. Another idea, this came out of some of those fintech accelerators that I talked about in the Silicon Valley. Real-time rewards. You're shopping at Mall of America, something I would never do, and you buy something in a store, and you use your phone, your card, or whatever it may be, and immediately you get real-time rewards for that transaction, immediately. So you get a coupon real-time, so to speak. Again, everything is moving to much more rapid speed, and real-time rewards is another example. And another component of this is for one of our big businesses is called merchant processing, Elevon Merchant Processing. It's a global business for us. And that is when you swipe your card or use your phone at a restaurant, we make sure that, and you want to pay for your meal, we make sure that you have the money that you say you have, that you are who you say you are. We take the money from your bank, we take a few cents, and we pay the merchant the difference. And that's our role for history. That's what merchant processing is. But think about that transaction for a second, all the information that occurred in that transaction. I know what time of day you ate, what you ate, because it was on the menu and in your bill. So that could help the restaurant with their staffing needs, their inventory needs, their accounting needs. So this whole concept of just money has moved to data. And data is the next horizon in all this activity. So companies using data provided by the banks over and above just money transfer. This is where this is going. Now, some of those things I just talked about are there today. They're capable, they're available, and you can do them right away. These are things that I predict, again, you're going to see in the next year or two. You've heard about the Internet of Things, and how does it relate to financial services? And you already are seeing this in some cars. Imagine that your financial credit card or your financial credentials, so to speak, are loaded to your car. And you pull into a parking space in Minneapolis or St. Paul, and the parking meter isn't there. There's just a sensor that knows that you're in that space, you are in your car, and it immediately just pays for your parking. And then when you get back into the car to leave, up on your dashboard says you've been there for an hour and 25 minutes, and here's your bill, and it's all handled immediately just like that. Imagine the same thing at a gas station. You go to fill up your tank, and you don't have to swipe your card to do anything. Again, the car communicates directly with the service station, the pump. Everything is done in a very automated fashion. So the common theme here, the common theme across all these things is doing things much more rapidly using data and using information. Now, you still may want to go into a branch to talk to a salesperson about the activities relating to your retirement, your 401k, your education, your car, your home. That's still going to happen. But we as an industry have to keep up to speed on these other activities in the way they're doing it. And the last thing I will tell you that I expect to be in terms of a change in the next few years is a conversational interface. I have an app on my phone called 1Password. I have 114 passwords on that app. 114 passwords, because I was told by our security guys not to use the same password for anything. So I don't. But passwords are really not very safe or secure. And I expect banks starting and many other industries over the next year or two to move to different ways to identify who you are and that you are who you are. Things like iris scans, things like voice recognition, things like the way you walk and your gait, proving that you are who you say you are. So what will happen over time is all this will change. The interfaces will change, the security will change. So as you think about the way I talked about it, sort of the offense and the defense, I want to leave you with the fact that things are changing rapidly. There's a lot of new technology occurring. The fundamental benefit for you as a consumer in that technology is going to make things easier, more convenient, and faster. The principal risk is that those things create additional risk from your financials and from the bank's perspective. And the banks are focused on both sides of that equation. They're trying to build that strong offense that I talked about while at the same time keeping a very strong defense. So I started by saying disruption will continue and we'll have to be ready. And I really believe that. And there isn't a bank in the country that isn't focused on this probably more than any other thing in their list. We spend at our company right around just under $1 billion in technology investment spend a year. And if I looked at our data from maybe 6 to 10 years ago, most of that would have been spent on physical infrastructure. And today, the great dominant spend is on digital infrastructure, both offense and defense. And that's what every bank in the country is doing. So as I'm sitting here in 2016, telling you about what's going on, because disruption will continue, I'm going to predict in 5 years there'll be a younger, new version of me and a new facility there. I hope not. talking about the next stage in financial innovation. And with that, I'd be happy to take any questions about this or anything you want to know about a bank. Somebody must want to know one question about a bank. Yes?
How much are banks moving towards the cloud, like AWS or?
The question is, how much are banks moving towards the cloud or AWS? And it's a huge change that's occurring. So it's interesting, though, because we're heavily regulated, we have both the cloud and the physical infrastructure. And by the way, we have duplication. So we have 2 sites in the United States. I can't say where because they'd hurt me. But it's a complete duplication. So if one of those sites was taken down, we have a secondary site immediately. But that is back to this defense side of the equation that we're very focused on. It's a good question. Hey, Cubs.
Hi. Yeah,
I grew up in Chicago.
Been a Cubs fan
Their
for over
parade
50
right,
years.
They're doing a parade right now.
I've been wearing this shirt for about 3 days. So the Internet of Things seems to be particularly prone to hacking lately. How do banks factor that in? You know, the companies seem to have little incentive to make them safer. How do you deal with it?
It's a big deal, and you're talking about what happened last Friday where basically, fundamentally, what happened where cameras were hacked by teenage kids in the basement of their parents' home to really, it's called denial of service, which is you put so much activity and so much chatter that's going on that really brings down the system, and that's what's happening. And this is some of the denial of service activities, what's impacting the banks. And when I go back to that, I tell you about that IP address from B of A. That's why we're blocking it today, because they had the attack yesterday. It's a huge deal. And I will tell you that it is, banks are a little bit out ahead on this one. In fact, Richard Davis, our CEO, and myself were at a meeting at the White House just last week to talk with the other 10 largest banks in the country, Department of Homeland Security, OCC, the Federal Reserve, and other regulators to talk just about this. Because it would be very bad if a bank was brought down by these activities and who would step in and how would that work. And there's a lot of coordination. But the bad news is banks are out ahead. We don't have it perfected yet, but there are other industries who are not nearly where we are. The best example I'll give you is energy. Think about our financial grid and the stress and the challenge that has, and if that were attacked, what that would mean. So this is my view about the new greatest threat to banking, and frankly to business and probably to the United States is this whole cyber threat. And I would expect over time, I heard a great speech by an admiral who is one of the individuals in charge of cybersecurity for the country. And he said, Andy, the Air Force started in 1947. There was the Air Reserves of the Army back in 1908. But the Air Force didn't start until the threats occurred, right? And he fully expects that in the next 5 years we're going to have a 5th branch of the Army, which is a 5th branch of the service, which is cybersecurity threats. And he also said they won't have crew cuts, they'll have long hair, it'd be really cool. But yes.
So when I think of banking, I think of kind of
Boring?
everybody connected. Yeah. I kind of think of all the banks connected, the big banks, the community banks, even really the credit unions. From a technology standpoint, everybody's pretty integrated. Do you see any kind of some of these threats coming up through the smaller banks? We work on the anti-money laundering side, and
Right.
That's obviously a huge hole there. So
Right.
just
I
curious.
do. So when I started in banking, there were 14,167 banks. And last month, there were 6,735. So that banks have, but there's still a lot of banks out there. And what happens is, there are correspondent activities that occur. Large banks providing services to small banks. And it used to be check clearing and activities around technology and so forth. And what's happening now is some of this digital activity and some of the security. So what I think you're going to see is more big banks providing some of these services to small banks. And because the big banks have some of the threats that they're facing right now, and they're going to help the small banks in terms of a process. But when you're all said and done, you're making a very good point, we all have to be connected here, because it isn't just our facility, our branch that's being attacked, it's the overall industry. Thank you.
I'm just wondering if you can offer an opinion about when you think the Fed is going to increase the interest rate.
I could tell you a joke I heard, but I won't tell you. I don't know, and you know who else doesn't know? The Fed doesn't know. So we go through a stress test, CCAR stress test every year for the last 5 years. In each of the last 5 years, the Fed, has projected 3 interest rate increases each year, so they've been wrong 1,000% of the time. The smart money, which isn't me, the probability, Wall Street will tell you, the futures would say it's about 60% in December, 25 basis points.
So,
One more question.
yeah.
Two more questions.
Yeah, a lot of these threats that take place come from companies that don't have, countries that don't have rules and regulations like we do, that actually, you can't arrest a person there for what they're doing.
Right.
What is the U.S. and other countries like Canada and England doing to try to enforce those countries and increase their rules, increase their regulations? So we don't have to have all this protection out there.
Right, and it's an excellent question, and this is the sort of getting to the line versus crossing the line that's occurring right now. People much smarter than me will tell you there's actually only about 3 nation states, 3 countries that can do something serious to the United States. And they firmly believe that 2 of them are more predictable, Russia and China, and we actually have agreements with those 2. And that while they'll get to the line, no one will go over the line. Because going over the line back to my services is basically a declaration of war. If they were doing something that serious, it'd be going over the line, they won't do it. The wild card is North Korea. And that's the one that we worry about. We're trying to create, and there isn't agreements with that. I mean, it's just putting force fields up. I can't negotiate with you about having agreements. I have to just build higher walls, to use someone else's terminology, but this is a different wall. But that's the concept. I'm sorry, I didn't mean to go there. All right.
Do you see the major banks getting into virtual currencies? Of
No.
their own or third parties?
No. So the question's around virtual currencies, Bitcoin. And I'll tell you the simple example. Today, one of the principal regulations in banking is AML, anti-money laundering, KYC, know your customer. In other words, one of the ways we're thwarting financial threats from terrorists is by getting them where they live, which is the money. So when you do a transaction with the bank, we have to know so much more about you than we've ever known before. And Bitcoin is the exact opposite of that. You're typically anonymous in that process. So I don't think that's going to become a functional currency in the near term. However, blockchain and open ledger, I think, will. And what blockchain and open ledger provide is the ability for you to see information real time across both horizons. And it's a big deal because things like letter of credit processing at a bank, which is an arcane, paper-intensive, long process, which has been around for 60 years, I think will be one of the first things that changes with blockchain open ledger technology. But I do not think Bitcoin or virtual currency will be a major factor in the US. Thank you. Thank you all for your time and attention.